Kenya achieved an accelerated economic growth in the third quarter of 2013, which has been attributed as one of the factors behind the projected upward economic growth of 5.4% this year. Although the country's GDP had fallen marginally below expectations, achieving a growth of 4.6%, short of the projected 4.7% growth, Old Mutual Chief Financial Officer Peter Anderson, however, notes that issues affecting economic growth, such as inflation, had been well grounded.
Macroeconomic background, in terms of the management of the economy, in terms of monetary policy and inflation, has been very well executed in 2013. We have seen the Central Bank of Kenya ensure that inflation expectations have remained well grounded. Core inflation is relatively low at around 5% region, and headline inflation is around 7 or so percent, and we do not see any material risks for an increase in the inflation number.
Anderson noted that investment opportunities in the country, vis-a-vis the risk for domestic and foreign investments, continued to be attractive last year, and that the Eurobond would also enhance Kenya's position on the radar for international flows into capital markets.
I think on a sector-based basis, we're talking for long-term investments. I think there's tremendous opportunities around, obviously, the oil and gas area is an area that we're going to see, as we start seeing more finds, we're going to see more capital being deployed, and we're also going to see larger amounts of capital that will be needed to set up the structures.
The growth could, however, be negatively impacted if the country experiences unexpected changes in weather conditions that could hit agriculture, hence affecting the overall growth of the economy, considering that the sector contributed up to 20% of the national GDP. Other areas expected to accelerate Kenya's economic growth this year include increased mining activities, tremendous opportunities in the oil and gas sectors, in addition to an improving global economy outlook. Nicholas Ndwati, BZ's at 1.